to kick it off, I would first like to have each of you tell us a little bit more about yourselves, your background, and your experience, as well as the companies that you currently work at that you're here representing. And then, because this panel is about all things startup funding, also let us know what types of startup funding you personally have experience with. So introduce yourself, your background, company you work at, and what types of startup funding you are an expert in. I will pass it off to Christina first, and then Christina, you can pick the next person and we'll just popcorn off like that.
Sounds great. Hi, everyone. My background, just before I was doing this, I was really involved in hackathons. I was part of Angel Hack, which was a female-led bootstrapped company itself, and we were doing hackathons in 50 countries and accelerators, so really got to see those super early stage ideas, testing and proving their concepts out. And now I am with Larta Ventures. Larta is a nonprofit and has been originally actually started funded by the state of California, doing economic development, and that has grown nationwide, and now works with 500 to 600 startups per year that are coming through America's Seed Fund. So a lot of the people coming through our programs are getting that non-dilutive funding, so funding that you don't have to pay back, which is great. If your company fits in any of the relevant areas, I'll talk a little more about that. But it's great for entrepreneurs that they're building something that is of interest to all these other industries and parties, and then you can get the funding to first prove out your model and then get access to more funding later on. And a lot of the companies that come through our program, we have phase 1 and phase 2, and then they'll get access to other corporate funding, other aligned partners. And we also now have specific programs that are even for earlier stage, which is the one I'm working on now, which is about sustainable solutions for cities. And then we have Heal LA focused on health and bioscience ideas. So that's a little of my background. Why don't I pass it to Todd?
Thanks, Christina. Hi, everyone. My name is Todd Hitomi. I manage the Ventures and Jobs Fund at Homeboy Capital here in downtown LA. For those of you who don't know Homeboy, we're about a 38-year-old nonprofit dedicated to providing services to the formerly incarcerated and the formerly gang involved. The role of the fund is to primarily acquire businesses that we think would be good landing pads for the people coming out of our program, so we can hire them on and pay them, as close to a living wage as possible. But we do look at startups that we think are at the center of a sector that can create jobs. And so we look at two models, both lifestyle businesses and startups. In my past, I worked for 5 years over at LACI, the Los Angeles Clean Tech Incubator. I managed the portfolio of startups there, and then ended up creating and running the Founders Business Accelerator program. Some of you actually participated in it that are in the audience. But yeah, that's my background. Zehra.
Hi, everyone. Really excited to be here. I'm Zehra. I am the head of founder community at Republic, and I sit here on our investment team. Republic is a global fintech private company that's really just looking to democratize access to private investing. So we traditionally are kind of thought of as a equity crowdfunding platform. We see the platform itself as so much more than I think that description. Really, it's a way for you to combine community and capital. And so I would say that I'm an expert in kind of guiding founders through when that is going to be a good avenue of capital for them to go down. And then at the same time, like just speaking to like 30 to 40 new founders a week, I think I've become pretty well versed in when VC funding is appropriate, at what point in your journey. I've also started to learn a little bit more about cap table management, and at an early stage, when you should or should not be considering giving advisory shares, having an RUV and SPV. So have tried to kind of I'd say familiarize myself with all of alternative fundraising, largely from the perspective of educating founders on what type of fundraising is right for them. VC fundraising is amazing. We all know it. We all aspire to it, I think, but capital is capital. I don't think there should be different hierarchies or types of fundraising that's put on a pedestal and some are not. Ultimately, the goal is businesses scale, they get profitable, and the type of capital they need should not be kind of ranked. I think all capital is good capital. We'll definitely get more into the conversation about this, but if you're interested in attending any of the events that we host, I run Republic's in-person events in New York City, in the Flatiron area. So feel free to just let me know if you're interested in that. And I'm happy to send and put maybe more information in the chat as well, but excited to pass it off to Valeria.
Awesome. Thank you so much. And it's nice to meet everybody here on the panel, and thanks everyone in the audience for joining. My name is Valeria Martinez, and I'm an investor at Belmos Ventures. We're an early stage fund, $50 million fund investing exclusively in diverse founders, focused across 4 different key sectors, being future of work, health and wellness, sustainability, and fintech. But if you're a diverse founder and you're building something incredible, well, for the most part, we try and make as much time as we can to be as supportive, even if it's outside of capital. So listening to pitches and offering feedback, things of the sort. We invest across some early stage, some pre-seed, seed, Series A, and opportunistically in later stage companies as well, which is actually great for our existing portfolio founders because they do have access to founders who are a bit later in their founding journey, and founders who are maybe 2 times, 3 times founders, and who are always willing to share best practices. So excited to chat a little bit more about venture capital, but totally agree with what other panelists have said. Venture capital is not the only form of capital. Capital is capital, but happy to chat about what it means to pitch to investors and everything around that.
Awesome. Thank you so much for those intros. Did want to make a quick note about the Zoom chat. Everyone, attendees joining us, feel free to utilize the Zoom chat. If you've been to one of our funding pathways panels before, you know we like to keep this very interactive. So if you're a founder and you'd like to introduce yourself, send a link to your business in the chat. And as you can see from those intros, we have a variety of our speakers, different backgrounds joining us. I know we also have founders in the room who are at all different stages in funding. So I like to ask a few more general and broader questions here in the panel. That way, once you do get into the breakout rooms, you can get those more specific questions and asks out there. But if you have any follow-up questions, feel free to add those in the chat as well, and we can see where it takes us. Okay, so my first question for the panel, kind of starting off with groundwork. At the beginning stage of a founder's fundraising journey, what should the founder be doing to assess their funding need and the direction that they plan to take with funding? What are the important questions they should be asking themselves? What factors about their business should they be taking into consideration? And feel free to just jump in here.
I can go. Our fund is a little bit different than the others here. We're not just focused on startups. And one of the things just in my past working with lifestyle businesses and starting to see kind of a transition with how startups are viewing their funding cycles, may be good to see how much traction that your product is actually going to have. I'm starting to see more and more businesses that are startups trying to generate their revenue, get to break even, and see if they even have a market for their product. This is something that we're interested in. We want to see businesses that, because we deal with businesses that are both on the back end and on the front end, we want to see, the ability for the business to be able to generate their own revenue and run their own business, thinking about the dimes and nickels that they have.
Sorry, Christina, I saw you on mute there. I think when it comes to thinking about venture capital, Todd alluded to this, but really thinking about whether your business is at a point where you know, you're ready to scale at a mass scale, and whether your market size is venture capital, you know, size, meaning in your mind, you're going to reach $1 billion in revenue, unicorn status, and that is kind of the path that you're on. When it comes to thinking about different venture capital funds, I always like to say, look for the funds that are already looking for you. Meaning there's a lot of VC funds that are, you know, aligned to investing, for example, diverse founders or certain sectors or certain stages. And so make sure that you're looking for the venture capital funds that are looking for founders like you. That's kind of my biggest piece of advice there. So someone, you know, like myself at Boundless Ventures, we're looking for diverse founders in those specific sectors that are also building products and services that positively impact diverse communities. So if that's something that you're aligned with, you know, reach out to us, because we're already looking for someone like you. So that's kind of the biggest piece of advice that I have in terms of, you know, looking for VCs and making sure that you're talking to VCs that are very aligned to your mission and your values, because you're basically entering into a relationship that'll be 7-10 years, for example. So really making sure that you're finding VC funds that will be partners on your journey. Todd alluded to traction, which is particularly important. I think there are VC funds that focused on pre-seed exclusively, meaning pre-product, pre-revenue for the most part, but that definition is pretty loose. So if that's where you are, look at VC funds that are focused on that stage. If you're a little bit later on in your startup journey, you know, look for funds that are focused on early stage. There are funds that have certain metrics around traction, meaning you have to have a certain number of revenue, maybe $1 million in revenue, for example, to talk to them. There are others that, you know, define traction a bit more loosely, which I know can be very frustrating for founders, but, you know, basically look for VC funds that are, you know, aligned to where you are on your journey and aligned to your missions and the values and the problem that you're trying to solve.
Yeah, and I think a huge part of that, I've just been reading the chat and it's awesome to see everyone's engagement. I think another thing that I always like to emphasize with founders is, first of all, recognize that you, even though it may not feel like it, you are interviewing the VCs and the investors as much as they're interviewing you and determining whether they want to be on your cap table. Your cap table is arguably the most precious document that you have when it comes to your business, especially in the early stages. And so make sure that you're having conversations with investors, especially because of kind of the progress we've seen with funds in general. Ask them why they think they're also going to be able to help give you guidance or provide introductions or take your business to the next level. Because I think everyone has realized in the past few years, capital is great, but it shouldn't be all that a VC is offering. And we're seeing great funds like 776 Ventures with Alexis Ohanian focusing on telling founders, hey, we mentioned you in PR this many times, we introduced this many investors to you, we did all these other things beyond the capital, and really like VCs should be doing that. So I would just encourage all of you to also reframe the conversation, think about it like that as well. It's really hard to frame it that way because there is kind of this like power balance where you are cold pitching to VCs and reaching out. But when you get to those later points and you realize that you've kind of gone past diligence and you're close to getting that term sheet, I think that that's a really good way to think about it in your mind, because not all money is necessary money, nor is all money necessary to be on your cap table. So just think really strategically about who you're letting onto it, especially at an early stage.
Amazing. And just, I think they covered the VC side, and just to touch on the side of, yes, possible government funds, that's something definitely to explore. You know, there's all sorts of categories that they're interested in, and if you can have that kind of support without giving up IP while you're creating, you know, testing your pilot and making sure that your product really is meeting a need, that, you know, that will be so helpful for you later on. For example, if it's related to food, agriculture, clean tech, energy, oceans, education, environment, climate, healthcare, like those are some examples. Turbo SBIR is a really good resource to help with the process that might seem daunting of filling out all sorts of paperwork. But, you know, if you are a possible candidate for that kind of funding, that really helps streamline the process and make it less scary. And then, you know, if you can work with a program like ours, like Lacey, like a lot of other ones that are, you know, going to invest resources in you and bring all the expert mentorship, while you're doing a pilot. I think it's for early stage ideas and very important, and you benefit so much from doing a pilot, getting that practical feedback and experience as well. And just, a lot of startups have gone on to get later types of funding after doing that.
Thank you, Christina. Yeah, I'm glad you mentioned that type of funding as well. I also like that we touched on VC, and thank you, Todd, for kicking us off. And also, as Valeria mentioned, talking about traction, which actually brings me to my next question. So somebody asked, how do you define traction? A challenge I have is that investors all seem to define traction very differently. And I think this is kind of similar to the first question, can also depend on industry and stage and things like that. So any tips around this? And I think another thing to mention too, as we talk about all these different types of funding, like you might be presenting your traction to investors to pitch, or it could be like in a grant application or in an accelerator application. So kind of very applicable to everyone to get some more tips and knowledge on the topic of traction.
I think it's interesting because, yeah, it is really frustrating that traction can mean so many different things, and you may get a lot of feedback that says, we'll be interested when you get more traction. And I think a huge part of that can be really frustrating as a founder, but I think you should just, first of all, push the VC to ask, okay, like what numbers would you want to see, or what is in alignment with your prior investments that to you defines traction? Because I know some early stage investors who will think of traction both quantitatively and qualitatively. If there's enough qualitative traction, they're down to invest. There are some that think quantitatively and qualitatively. So I would just honestly ask them and push honestly to get a better answer and better clarification on exactly what traction they're looking for, because some investors are going to be comfortable investing in a company that has traction in the form of a skilled advisor who exited their company and operates in the same industry. Some are going to say, we actually want to see 10K MRR, or we want to see you hit 200,000 in revenue in the last year. Like there's a lot of specific things that people have in mind, and they won't phrase it immediately, but anytime you ask or push back, I find that you are going to get more clarity there. And if anything, in the first conversation you're having with the VC, I would ask honestly, because then you save yourself the trouble. If they say no, you understand what their expectations are. And I think it also just shows like an acumen where you are thinking about what the VC and the founder wants to see, or what the VC wants to see from the founder. And then it gives you almost the power to dictate how you're going to then present some of the traction that you do have, especially if it does lean more qualitative than quantitative. You can reframe the way that you're defining and representing the traction you have so far.
That's really great. Yeah, I think for us, we're aware that traction can look very different according to what type of startup you are, what industry you're in. Some industries are so slow moving, and just having 5 customers could be really indicative that you're onto something. So I think, being around people and investors that are aware of that and know your industry well. I mean, for us, we look at sustainable development goals. Which ones are you aligned to? I think this, because impact investing is growing so much, a lot of people we talk to aren't even aware, oh yeah, like they are touching on all these other sustainable development goals as a byproduct of what they're creating. Definitely looking at pilots, even if it's very small, even in one underserved neighborhood, for example, if you've shown a big impact there, that can be even more telling than a larger, more diluted impact. Are you solving a real problem? What's your evidence for that? We have like a more fluid outlook on that, flexible for all the different types of startup journeys, and then of course the product market fit that you developed.
I think from speaking on behalf of Vamos Ventures, certainly not on behalf of LVCs, for us, it is a holistic review process of what we define as traction. So what I mean by that is, what can you tell us that proves to us that you are solving a problem that needs to be solved and prove to us that your solution is the only solution that will work. And on top of that, why is your founding team the only team or one of the only teams that can do it? And so however you can answer that question for us proves, okay, they're onto something, because we are an early stage fund. Obviously, when you're talking later stage, then traction becomes a whole different type of question. But for us, the evaluation is quantitative and qualitative. So we can look at traction in terms of, wow, they've got really great revenue. They're at, almost $1 million and they're raising a seed. That's fantastic. But it can also be, they're a sustainability company. And to Christina's point, they've got 5 pilots with big organizations or, manufacturers, et cetera, whatever it may be. So it is, I totally get it. I hear it all the time. It's very frustrating because a lot of investors will say, we're going to pass because you don't have enough traction. Well, what does that even mean? But, for us, that is a holistic review process. And to Zehra's point, ask the VC fund up front, do you have certain benchmarks, certain metrics that you're looking for before even getting into the pitch conversation? And I realize that's, probably a very, very loose answer, but it does vary from VC fund to VC fund in terms of how they define it.
Yeah, and to expand on that, we've talked about pilots, and I think that for many startups, their mistake is to try and create a pilot that's way bigger than what they really need. I think starting out small, building up from that success into a bigger pilot shows a little bit more sense, and you can close the pilot, show your data, and then you have something to build off of. Additionally, for us, when we're talking about traction, because we're looking at companies that we're going to merge and acquire, we want to see self-sustaining revenue streams, like where the business can actually run itself. You're not chasing after and convincing people to buy buy your product, but they're buying it on their own. This is really interesting for us. And then once you have that, the ability to describe a realistic pathway to scalability is I think going to be really important, because I think that a lot of startup founders, they think, well, I'm just going to get more money and that's going to be the solution. But really, that's a means to the solution. The pathway is the map that helps get you there, and it shows your acumen, as others have mentioned here. There was one other thing. When it comes to customer data, this is something that you can actually start to track on your own and use it as a leverage point to say, listen, guys, I have interviewed 200 people in the market. This is what they're telling me. This is the proof that I think you should need in order to know that we're on the right track. If you don't have that, then everyone's just guessing, right? So having the data and collecting the data is, I think, really important.
Awesome. Thank you for some really insightful advice. I like how we touched on quantitative and also qualitative traction, and Christina and Valeria pointing out pilots, Todd expanding on that for us. And I like how Zehra mentioned, asking those follow-up questions to investors, or just asking them first and foremost before you even pitch or start the interaction. So I know we're right here at the halfway point. I'm going to ask one more question and then we'll transition into breakout rooms. Kind of on that same vein of initiating the conversation with investors, just wondering any tips and best practices for meeting and networking with investors, or continuing to further build and maintain existing relationships with investors. Best practices around that, and any tips for those in the room.
I think the first thing that I always tell founders about, it's a new software called Notus, Notus. They are an awesome platform that essentially allows you to kind of see who you're connected with on Twitter. And it'll also allow you to see, let's say there's like a VC you want to get introduced to, you can put their information in Notus, and Notus will tell you who is following you that's has the strongest relationship to them that can facilitate the introduction. So that's more of just like a software tip. I think it's an awesome platform and it can definitely expedite you figuring out like how you can get warm introductions. What I always like to tell founders is if you make a spreadsheet with like your dream list of VCs, let's say like a month before you want to start the VC fundraising process, you should have at least like maybe let's say like 5 to 7 either ex-founders, founders, or VCs that you're close with and you can rely on. Make the spreadsheet just with each of their names, the names of the fund, and have them fill in who they know at those funds and can help facilitate a warm introduction. And let them know, I think in the spreadsheet, you should also say, this is the partner, this is the analyst that invested in a similar company or focuses on the industry, and this is who we think would be most interested. And that's just like purely a tactical piece of advice, but I think thinking ahead of time and creating it and sending it to people that you know who are going to be able to make those introductions is super helpful. And I always do this for founders where they'll send it over for me or send it over to me. And if I see like 10 to 15 funds I know, I'll ask them for a blurb, how much they're raising, the size of the round, if they have a lead, how much is committed already. And then I just send that off and make introductions as VCs and investors indicate interest. So that I think is a really good strategy to employ.
I definitely echo what Zehra said. So, and what I'll add there is, if you happen to know any portfolio founders of the VCs that you're trying to get in front of, go through them, because I will tell you, we take every warm intro that a portfolio founder sends our way, even if it's not a fit. But because we take our portfolio companies very seriously, and we have a really great relationship with all of them, if they send us a founder that they are vouching for, we'll take the call, and we'll take that meeting. So that's a great way to get in. What I'll also say is I spend all day, meeting founders that are currently fundraising. And what I would say is when I meet a founder who reaches out to me, or we're at a networking event, etc., and talking to me about their business, and they're not actually fundraising yet, they're just looking to build a relationship. It's so much better when you're trying to build a relationship when you don't have an ask of anybody, regardless of this, whether you're asking for VC money or not. But that to me seems to stand out the most, is when a founder comes to me to say, let me just tell you about my business. If you have any thoughts, feedback, whatever, and then I'll reach out to you once I'm ready to fundraise. It's kind of that initiative to start that relationship far in advance that is impactful for us.
Yeah, I'd like to expand on that. I think that's absolutely right. But whether you're dealing with startup funding from venture funds or from a bank, the best thing to do is to prime the relationship when you don't actually need the money yet. It's just a completely different relationship dynamic. And so it's more about, hey, here I am, this is what I'm doing, just want to let you know about it, versus having an ask, which can put a little bit of a practicality around the conversation, right? And yeah, so what that means, though, what that implies is that you need to get out and really talk to people, have your pitch refined, talk to a lot of people, go to as many events as you can, so that when you actually do come to the point where you need to ask for money from somebody who's maybe an institutional investor, you have your pitch refined to the point where you're not practicing on them, right? And they're going to notice that. So that would be my advice.
That's great. Yeah, I think those longer term relationships are very powerful, and investors get a sense too of the type of entrepreneur that's really waiting just for that opportunity versus people that are really out there building. And we were just in Miami scouting for environmental ideas, and the investors passionate about that space are really watching, and they're really paying attention, and they're waiting for someone that is doing something really amazing. So also having the focus on those organic connections when you are so dedicated. Are you really kind of building a community around what you're doing? Are you getting to know all the stakeholders, partners, showcasing your impact, finding everyone that's aligned with your mission, the types of investors that you want that would be passionate about what you're doing? so building that presence in those aligned communities, I think, is also a powerful part of all of that.
Definitely,
Can I,
yes.
can I add one more note?
Yeah, go ahead.
Invariably in every network, there's like a super node. There's like a person that seems to be the connector for all sorts of other sectors or different things. Figure out who those people are and see if they're willing to give you their time, because sometimes they could, just by hearing you, they can say, hey, listen, I actually think I know somebody who can really help you out here. You might not be ready for this, but you might be ready for this. And they make that connection that you weren't even aware of.
Thank you, Todd. Yes, this is such amazing advice. I really like how, Christina, you kind of alluded to like founder investor fit and really doing your homework so you're ready to make the most of those organic interactions. And Zehra, that was a great mention of notice. I had actually never heard of that, so definitely writing that down. I'll email that out to everyone after as well. And I like how Valeria and Todd were just reminding us that like it's never too early to start networking. You have to wait till you're ready to fundraise to go out and put yourself out there. In fact, it seems like it's better to get ahead of that and be doing that before. Oh, thanks for sending the link in the chat. Copy this. But yeah, thank you all for an amazing panel portion.